Hello viewers, welcome to my channel. Today we are going to see dissolution of partnership, insolvency. Here they have given there are three partners, thin, short and fat. Their profit sharing ratio is 2 is to 2 is to 1. The balance sheet is given. We will go through it later. Thin decides to retire on 30th September and fat appears to be short of private assets. It means that he does not have any money even at his home. So he will be the insolvent partner. And short decides that he does not wish to take over this thin share of partnership. Now they have given all the assets were realized like this. Some amount has been realized and the realization expenses amounted to 4,500. I hope you understand what is the realization expenses. If you do not know, I'll just brief it. In case of dissolution, you have to appoint someone to follow the procedure of dissolution. So some expenses you have to pay to brokers in the form of commission or something else. So realization expenses must be paid. Okay, the bank overdraft also discharged and the creditors were also paid in full. They have made the payment. And you are required to write up the following ledger accounts. That is realization account, partners current account and capital account showing the closing of the firms of the books. Now, they have asked you to follow the rules in Garner Vs Murray. I'll just brief it if you do not know. This is a famous landmark case in London in 1904 and the principle of this case, what was the justification of this case was still followed in India also. So they have asked you to follow that rule. What does Garner and versus Murray principle? It is simply a principle. You take it as a principle which you have to follow. Nothing to think more about that. First thing in this, they say that all the solvent partners, all solvent partners must bring cash. All solvent partners must bring cash equal to realization loss. All solvent partners must bring cash. Right? It will take time. Must bring cash or into bank the equal amount of realization loss. Okay. Solvent partner here means equal amount, amount of realization loss. Okay. Here solvent partner means a partner may have a debit balance, but he may be solvent. He may be having private property. So he may be able to bring money from his home. So all the solvent partners must bring equal amount of realization loss first. Second thing, we have to calculate the deficiency amount. If you follow this, the question is very, very easy. Calculate the deficiency. That is the insolvent partner. How much he has to pay to the firm. Deficiency due. How will you calculate this deficiency due? Definitely an insolvent partner may be having a debit balance. So just even if he's having some credit balance, find out how much is the due by just subtracting the credit balance and debit balance. This due amount, here it is very, very important, will be borne by, because it is a capital loss. This capital loss will be borne by solvent partners having credit balance in their capital, will be borne by solvent partners. There, in the first point, I said all the solvent partners, though they are having debit balance, will bring their loss in cash. But the loss will be borne by only the solvent partners having credit balance. Clear? Having solvent partners having credit balance in their capital. All of you know what is a credit balance. I hope so. Credit balance in their capital. Okay. Credit balance means the credit side total is more than the debit side. So these people will bond by the, this loss will be, this is known as a capital loss. This will be borne by these solvent partners in which ratio? It will be borne in capital ratio. In case of fixed capital, you have no problem. There is an amount of capital, you just take the ratio and distribute the loss in the capital ratio. In case of fluctuating capital, just before dissolution, whatever the amount due to them or due from them, subtract everything, find out the net amount, then in that ratio, distribute the loss. Okay, let us proceed with the sum now. So first what you have to do to bring the, to make the realization account, we have to bring all the assets, because here the asset accounts will be closed by transferring into a new account, which is realization account. So I have written all the assets here on the debit side, because assets will be credited and realization account will be debited. Then only assets will get closed. So I brought all the assets here, and here from the balance sheet all the assets, premises, fixtures, plant, stock, debtors, as given in the balance sheet. I have brought it here. Okay. Second thing is that the capital account, this is a fixed capital method because there is a current account. So we have no problem in finding out the capital ratio. 80,000, 50,000, 20,000 I have posted in capital account, partners capital account. Next one, they have given the current account balance. FAT is having a debit balance. He is the fellow who is becoming insolvent. So I put the balance brought down on the debit side. For others, I have put it on the credit side. I think it's clear up to this. Now, the sundry creditors and bank overdraft is a liability. This will be taken to your realization account on the credit side, because if you want to close the liability, liability has to be debited and realization account has to be credited. So the balance sheet item is posted to respective accounts. Capital account I posted in capital, current account I posted in capital. I transferred all the liabilities to the credit side of realization account and all the assets to debit side of realization account. Now no account is opened. Everything is closed. Now let us see how they are realizing the amount. The premises are sold for 60,000. Plant is sold for 1,07,500. So we have received money. So you have to write by bank account. Bank account will get debited. Premises will get credited. You can open your book if you want to check the amount also. Premises is realized 60,000. Okay. Plant realized 1,07,500. Okay. Now next item they have given fixtures 20,000, stock less 5%. Fixtures 20,000, stock realized less than 5%. Stock was 43,200, and if you subtract 5%, they have got it 41,040. You can calculate it. You can less 5% from 43 to 100. Then comes debtor. Debtor, what happened? Debtor realized 45,900. So we will take that 45,900. So this much amount we have received in bank, okay, by giving the assets. So the total comes to 60,000, 107,500, 20,000, 41,040, 45,900, 274,440. This is the amount realized in the bank. Okay. Next thing, they have made the payment. They have already said that creditors are paid in full and there was an expense of 4,500. And bank overdraft was also discharged. So realization expenses was 4,500 and creditors are discharged in full 84,650. That was 84,650. Bank overdraft was 44,330. Here, you need not to worry about individual item, how much is realized in case of assets. Simply take the amount what is received. We will see the total loss or profit on that. Okay. So now this is over. Now we have transferred all the assets on the debit side of realization account and all the liabilities, outsiders liabilities, okay, on the credit side. And whatever we have realized by selling the assets, we have taken by bank account and we have made a payment to creditors, bank overdraft, everything. Now you can simultaneously post this into your bank account so that you are able to do it. So now we have made the payment of 4,500. You can individually record it or you can record in total. 44,330 for your bank overdraft, 84,650 for your creditors. So the total comes to, you can record separately also. 134, sorry, 133,480. Or you record it separately also. So how much we have paid for expenses? 4,500. And we have paid 84,650 creditors. I think so. 84,650 we paid creditors. And the bank overdraft we have made the payment of 44,330. Okay. So I have recorded this 330 and we have realized 274,440 from assets. So I am making it in one entry 274,440. So double entry is posted. Now for this. Okay. Now moving on to the realization account. Generally when there is an insolvency, 133,480. Here I am writing it in total 133,480. So when there is an insolvency, generally there will be a loss. It need not be a loss, but in your question, generally it will be a loss. So now we are going to total this amount 133,480, 50,000, 1,25,000 plus 32,500 plus 43,200 plus 54,780. The total comes 4,38,960. I am writing it here 438,960. Hoping that the debit side will be more. So I am copying 438,960. So now the loss will be borne by, the loss will be distributed to all the partners, whether he is insolvent or solvent. Okay. So now we have got three partners, thin, short, and fat. Thin's capital account, short, and fat. So I'm writing it in short. Okay. Now minus 274,440 and minus 44,330 minus 84,650. This comes 35,540. The loss, total loss comes to 35,540. This has to be borne by the all the partners in their PSR, profit sharing ratio. Profit sharing ratio given was 2 is to 2 is to 1. Divided it by 5, 7108. This person is having one portion, 7108. Short is 2, 14,216. And the thins capital will be debited with 14. Sorry, here it will be current account. I'm sorry, because they have got a current account, so this has to be posted to current account. After that we will transfer it to capital account. So everybody's current account. Okay, so now this realization part we have to post it to current account, partners current account. So now to realization account, this fellow 14,216, I hope so. Here also 14,216, and fat will be 7108. If you patiently see this video, you will be able to understand it in complete manner. I hope after this you will not be having any problem. Now we are going to close this current account. Okay, this total is 29,700 because it's more. So I am copying it, 29,700. So the balance will be taken to capital account. Transfer will be made to capital account. That is 15,484. Okay. So this is transferred to capital account. Here it is 11,300. Here it is more, 14. Loss is more. So Y capital account, transfer to capital account. For this fellow it will be 2916. 2916. The total is 1632 and 14,216. So it matched. Now for this fellow it is totally debit, is the insolvent fellow, 21,608. So this is also passed to capital account, 21,608. So the current account is closed. We are going to transfer it to capital account. So in here the to current account. Current account. These two fellows will have a debit balance. 29 short will be 2916, and this fellow is 21,608. This fellow was having a credit balance. So by current account, by transfer from current account, after adjusting the realization loss, 15,484. Okay. So now this is also done. Now we are going to follow the rule of Garner versus Murray. Okay. Now what this fellow has told, first ask them all this solvent partners. Here both partners are solvent and both are having credit balances. So he says that you ask those solvent partners having credit balances to bring the loss, realization loss, first in cash. So we are going to ask them to bring cash. So I am going to write here, by bank account will get debited and their capital account will get credited. By bank account, they will, both of them will bring their realization loss. That is 14216 and 14216. Now go to simultaneously to your bank account and put that amount into bank. So he brought 1416, and this solvent partner having credit balance brought his amount. So we have posted on both places. Second rule, what the rule says, calculate the amount deficiency due. See here. First we are going to see this fat. Fat is having a debit balance 21608. There is a credit of 20,000. So there is a deficiency of 1608. You can simply calculate that 21608. So 20,000 is having a credit and he is not able to bring anything from his home. So now what is, you can make a working note, total deficiency due. Total amount due from FAT 1608. This has to be borne by both the solvent partners, thin and short, because they are having credit balances. This has to be borne by them in their capital ratio. What is their capital ratio? 80,000 and 50,000. That is 8 is to 5. So 1608 you have to distribute in their capital ratio will be, if you divide it by, you know how to find out the ratio, I hope so. I'm not wasting the time. 989 and 619. 1 rupee here or there will not matter much. Okay. So this will be borne by both the persons in the ratio of capital ratio. Okay. Now we are going to close first PATS capital account. How? By this deficiency, they are going to give you by, who is the tin's capital account. He is going to get how much? 989. And short, how much he is going to give by short's capital account? You know the journal entry. If you are not knowing, we have to debit thin and short's capital account and credit fat's capital account. 619. Now total this 9 plus 9 18, 8 1 2 0 1 7 6 21,608. So his account is closed. Now we have to debit these fellows to FAT's capital account. FAT's capital account. You have to write clearly. The presentation should be very neat. Deficiency. Because of deficiency, these fellows are bearing this loss 989, and here he has to be debited with 619. This amount is over. Clear? So now we have completed the rule. First they have said that bring the loss in cash. We brought the loss in cash. Second thing, calculate the deficiency, and it has to be brought by the solvent partners having credit balances in their capital ratio. We did that also. Now we are going to close the capital account of them, how much is due to them or due from them. Okay, 80 plus 15, 95, 95,484 plus 14,216 comes to 109,700. 1,09,700. So copy this amount, 1,09,700 minus 989. he is going to get minus 989 will give him 108711. 108711. This will be paid to him to bank account. If it is cash, you can make it as cash. I am writing bank account. Okay, to bank account. Now we are going to close this fellows. 64216. 64216. So 64216 minus 2916 minus 619. It comes to 60,681. This will be paid to this fellow. Okay. So the total comes to 64216. Now we have closed the capital account also. Now this we have to post it in the bank account. By Tin's capital account, how much we have to make him? 108711. 711. And we have to make this fellow 60,681. Now we have to total both the sides. Okay. So I am going to total it is 4,500 plus 84,650 plus 44,330 plus 108711 plus 60,681. The total comes to 3,02,872. 3,02,872. If your total matches, your sum is right. 2,74,440 plus 14,216 plus 14,216. 302,872. 302,872. Complete. The problem is solved. Hope it's clear to all of you. If you like my videos, please like, share and subscribe, and share this with your friends who are all interested in this type of learning. Thank you for watching.